everyone, welcome to Morning Trade with Money Control. I'm Karunya Rao and we are here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by our guests on the show. Before bringing them on board, let's see what the global handover looks like. On Friday, Europe closed lower after a key US jobs report showed unexpected strength in the labour market. Non-farm payrolls on state side increased by 5.28 lakh in July, well above the 2.58 lakh projected by Dow Jones estimates, defying signs that the economic recovery is fading. Wall Street ended mixed following a volatile session as investors assessed what a strong labour market would mean for Fed Reserve's rate tightening campaign. Stocks in Asia trade lower and for our own markets, SGX Nifty signals a weak open. Stocks in the spotlight today, SBI, OMCs, BPCL and HPCL, Paytm and Marico, all the earnings candidates. As key banking and financial earnings wrap up for the quarter gone by, we get you a review of the banking sector Q1 performance and outlook for the coming quarters. All right, let's touch base with Binod Modi from Sharekhan to talk about the banking sector Q1 report card and how most of these names stack up against one another. Good morning, Binod, and thanks for taking time out this morning. First up, want to know about SBI's earnings. If we look at the Q1 performance, there was credit cost trends which were lower. Growth has held up. Expenses were well managed. NIMS, yes, there was a bit of a decline. And it was a bit actually on the unexpected lines, really. So overall, if we look at the performance of State Bank, what would be your assessment?
Yeah, SBI performance has been kind of mixed bag, I can say, despite, there has been some green shoots witnessed from, credit growth, 16%, credit growth on a YOY basis. That looks to be quite strong. So on the positive side, I can say, yes, one strong, credit growth that certainly bodes well for, SBI in the near to medium term. In addition to that, we have seen, despite, higher slippages, the asset quality of the company remained more or less steady at 3.9%. That's against, second positive. And last, of course, as you mentioned, the OPEX has been, quite resilient during the quarter, unlike other banks where we had seen, there has been, modest spike in, operational expenditures for most of the banks. But in case of SBI, it's been, maintained. So I think these are the, positive that we can, gather from the numbers. But on the negative side, I can say, of course, there has been some sort of, moderation in, NIMS. That is one. In addition to that, we saw that, that the deposit ratio, deposit growth has not been, up to the mark, at 9% kind of, deposit growth. That certainly does not augur well for going forward. And at the same time, slippages, as I said, 1.3% slippages for the company looks to be at higher side. And of course, with the fact that, there has been, slippages witnessed from, the retail book as well as, SME and agri book. So overall, I can say it's a mixed bag. But having said all, SBI is a bank which has been, showing, consistent growth over last 2 years. NPA, from almost 6% plus, it's been, 3.9% in 2 years. So that looks to be quite remarkable. And given the fact that, economy looks to be, in a better shape and the credit growth scenario looks to be, far better here on in next to the 3 to 4 year perspective. So I think the banks should continue to see, absolute growth in, in earnings. And that certainly augurs well. In addition to that, we should not forget the fact that SBI's, other businesses has also been doing, quite fine, be it, credit card business, mutual fund business and all. So I think value-wise, SBI still looks to be, a value pick in my view.
Right. What about the overall performance of, many of these larger lenders, whether it's not just SBI, but even the private sector, HDFC, Kotak Mahindra, ICICI Bank. Overall, if you have to review the report card of the sector, how do you think it performed this time around? Largely expected lines?
Of course, I mean, most banks have performed, on expected line, though there has been, some sort of a spike in, OPEX because of their high tech expenditures and, high employee costs. But I believe this tech expenditures is going to have, positive impact, as we go, you move forward, in coming quarters. But having said all, and one thing was quite, notable during the result that the credit growth or, loan growth has been, quite impressive for most of the banks. That is the thing. I believe that should continue to add overall banking performance. And asset quality front, I believe with the fact that the asset quality, GNP and NPA remains steady for most of the banks. At the same time, with higher PCR ratio, I believe the credit cost of most the bank will remain I mean less than 1% mostly. So that should add all the banks to report healthy earnings as well as ROE going forward. So overall, I think I don't think so that the banks as of now there is any big negative surprise. But yes, I think looking at the kind of SME book that most of the banks are started focusing upon, so that would be that would be thing which has to be watched out going forward. But overall, I don't think so that as of now that there is any big concern for the banking space.
Okay, all right. Like you said, most banks look strong going forward. Asset quality woes are largely behind. Credit growth is looking fairly encouraging as well. And these are some of the points which even the RBI governor had flagged off on Friday's commentary, that credit growth is good. Overall economy is looking good. There's good investment, pickup in capex, etc. So going forward, which of these lenders do you think are most promising? Is there any names that Sharekhan is betting on right now, or you have a good, optimistic or a buy call perhaps for the next 1-2 years time horizon?
From our in-house research point of view, I think we can say that these private banks, like ICICI Bank, it has been doing quite well over last couple of quarters, and the way it is shaping up their overall balance sheet as well as the liability franchise, that looks to be quite interesting to see. And we have already seen that the valuation gap between this ICICI Bank and as well as the HDFC Bank to an extent has bridged in a better way. So I think that ICICI Bank should continue to do well. In addition to that, we are also quite positive about some of the the public sector banks like SBI, because we believe whenever there is strong uptick visible in the credit cycle, and these banks have already improved their asset quality over last 2 to 3 years, these banks are in a better shape as of now to to register strong growth with credit cycle improvement.
Okay. What about, the overall outlook? I mean, yes, you actually did say that you're optimistic on PSBs, which is quite interesting because many people we speak to from the banking universe, they largely are more optimistic and more buoyant about the prospects for private sector lenders. But what are the big monitorables that, that we should be looking out for when it comes to the banking sector going forward? In terms of macro data, in terms of earnings, in terms of the overall, scenario, what will be the big monitorables to watch?
To me, I think the big monitorable, I can say one, of course, how these banks are managing their SME portfolio, agri portfolio going forward. One, and second, of course, as I said, most though we are seeing very strong improvement in the credit or advances growth, but commensurate to that, the deposit growth of these banks has been lagging. If I just keep aside HDFC Bank, most of the banks deposit growth has not been up to the mark, right? So I think this thing could be this area I think has to be looked going forward, because with the the repo rate is increasing, and as of now as we know that the RBI mentioned that the 3.6 or 3.8 lakhs crore the system liquidity as of now. So that clearly indicates that the banks will have to increase their deposit rates going forward, and how this deposit rate will impact their NIMS going forward. So this thing has to be looked out. So these are the key monitorable to be going forward as we go along.
In terms of NIMS, NIMS performance, not just for SBI, but the overall larger lenders, ICICI, HDFC, Kotak, IndusInd. How has the trajectory been, and do you think it will stabilize or rather build on the current base going forward?
NIMS performance, I think it should be more or less at the current level only, because I don't see any sort of big trigger to see any sort of improvement in NIMS going forward, because as we stated that the impact of the rate hike is to come, is yet to come in their overall NIMS, right? So this is the thing. I believe I don't see there is a big scope to improve the NIMs for most of these banks.
Okay. All right, Binod, thank you so much for joining us once again and talking to us in detail about the banking sector review and what could be the likely way forward, and some important monitorables to keep on your watch list if you want to invest in the banking financial space. Okay, let's talk technical. Shrikant Chouhan of Kotak Securities joins us now. Good morning, Shrikant. We're looking at a muted start, I'd say. The SGX Nifty is perched exactly at 17,400. It's a truncated week. In fact, next week also will be a truncated one. What kind of a trading action should we expect?
Yeah, good morning, Karunya. Good morning, everyone. I think, see, the market is it's going to consolidate for next few days, because it is very close to its important crucial level of 17,500. So till the market is not crossing and sustaining above the levels of 17,500, we cannot expect any meaningful activity in the near term. Technically, the markets are very close to its overbought level, and also it's very close to the psychological important crucial resistance level. Also, even if we go through with the option statistics, then based on that also, we have huge number of call writing between 17.5 to 17.6. So that's why we are going to see furthermore resistance somewhere close to 17.5. But on the downside, 17,300 is going to act as very good support in the near term. So from there, we are expecting some rebound in the near term. And till the market is above 17,300, we can expect sideways activity. Below 17,300, we can expect further more weakness. So for the day, 17.3 and 17.5 is the level to watch out for.
Okay, thanks for that. Let's also talk about SBI. It's going to be the cynosure of all eyes today. Saturday, they delivered their numbers. It's been a mixed bag. We just spoke about it in detail with Binod as well. How are the technicals placed for SBI? Because definitely last 1 month has been quite encouraging. Consistently, it has been trading above that 500 level, that important psychological level of 500 rupees a piece. I think it shut shop near 5:30 on Friday. So tell us, what should investors of SBI be bracing themselves for?
Yeah, so like for technically, the stock was very close to its previous all-time highest levels of 549 some 3 days back. And since last 3 days, it was like finding difficulties to sustain at higher levels. Eventually on Friday also, it closed at the lowest point of the day. So based on the result and based on the technical formation, we can expect weakness up to the next level of 520 or 515, where the stock has spent maximum time. So there we are expecting stock to come under some buying pressure. But in case if we see the stock is sustaining below the mark of 515, then we can expect further more weakness, maybe up to 490. So broadly, we are of the view that till the stock is not crossing 550, it is going to consolidate. And if there is any rebound, then I think some selling should come, because the stock is very close to its crucial level.
Okay, all right. Also, want to flag off OMCs, BPCL and HPCL, both of them earnings candidates. If we look at BPCL's numbers for Q1, they've posted a close to 6,300 crores worth of loss against a profit on a year-on-year basis, largely dented by input cost pressure. Revenue, on the other hand, was up 54% year-on-year. HPCL once again posted a loss, 10,200 crores, largely because of erosion in marketing margins on motor fuels, CNG, etc. Revenue, just like BPCL, even HPCL's revenue was up 56% year-on-year, coming in at 1.2 lakh crores. Let's talk about the 1 month chart. If I look at both BPCL and HPCL, they look very similar in terms of how, the last 1 month has played out for each of these scripts. Tell us what lies ahead. Some of our viewers have also been posting about HPCL. So if you could address both these stocks one by one.
Yeah, I think, see, the result or the outcome of the result is already there in the price. The price was moving upward, but it was much gradual. But after maybe the announcement of the numbers, finally we are expecting stock to start moving into specific direction, and we are expecting upward activity for HPCL as well as BPCL. Maybe we may see some lower opening because of the overall weakness in the market, but eventually we are expecting BPCL to move towards the levels of 350, 360, which is crucial resistance in terms of 200 days simple moving average for BPCL. So we are expecting upward activity. If there is any lower opening, we should be buyer for BPCL. And for HPCL also, the closing was much better as compared to the overall expectations. But broadly, there also we are expecting stock to move towards the levels of 270 or 275.
Okay. Next up is Marico, another earnings candidate. Year on year, I think largely the numbers are flattish if we compare the growth with the same quarter last year. Q1 profit 377 crores, up 3% odd. Largely, it's the operating performance which has lent its support to the bottom line. Revenue is up a meager 1.3% at 2,558 crores. So, flattish growth seen perhaps largely on expected lines. On Friday, Marico was down about 2.5%. But tell us, how could it react today to earnings?
I think the stock is underperforming to the entire basket. It is not crossing the level of 540. It is not breaking below the levels of 470. So technically, we are of the view that it is going to consolidate between this range for a longer time. We are not expecting any major upside in the near term, and that is the reason maybe after the announcement of the numbers, we are expecting stock to come under some profit-taking pressure, and we should be in fact a seller in the stock. Instead of holding Marico, we should look for adding some stocks from the QSR basket, and you say from the hotel and restaurants basket. It is better to switch from Marico to other stocks.
Okay, all right. And last one on our list as far as stocks and news are concerned is Paytm. Q1 loss has widened quite significantly, coming in at 645 crores. Revenue from operations 1680 crores, up almost 90% year on year. But let's talk about the share price of Paytm. I'm not sure, Shrikant, if you track it and if there's enough historical trends to refer to. It has clearly, languished for quite some time, but in the last few weeks, in tandem with the overall market momentum, we've seen a 10-11% uptick come by in Paytm as well. Right now, it's at sub 800 levels, slowly inching up. But will that upward momentum and the upward trajectory continue, or could it be met with some more consolidation before it meaningfully picks up?
See, for Paytm, it looks like that it is going to continue its upward rally, but in a gradual manner. The reason is because technically the stock has made a double bottom close to 525, 550 levels, and it has validated to the double bottom around 725. So if you just calculate the overall retracement from current levels, from the breakout levels to the target levels, then it is somewhere close to 900, 925. In case if there is any correction because of maybe some weakness in the market, then the chances of hitting 750 or 740 would turn bright. But broadly, we are expecting stock to move towards the levels of 900, and there is enough data to track the stock. Paytm listed in the month of November 2021, so there is enough data to track the stock. But the best part is that when the stock was between 500 to 700, we saw a huge amount of delivery-based buying. Means there was selling also, but someone who has bought has actually lifted the stock above the crucial level of 700. So we are expecting stock to move towards 700, and if there are any holdings, then one should look for holding to them for next at least few months.
Okay. Let's address some of our audience questions as well. The first one I want to pick out is from Abhishek Ranjan. He wants to know if it's a good time to buy Adani Green after the recent correction post its results. Now, last 1 month, Adani Green has tried twice to, surpass those 2,300 levels, but hasn't been able to do so successfully. 2289, 2290 was where it hit, and then again there was some retreating seen there. So let's talk about what lies ahead, and if 2100, where it's right now, offers a good entry point.
I think for Adani Green, it is consolidating, and it is consolidating in a triangle formation. So that means it is forming lower highs and higher lows. So we are of the view that it is going to consolidate for some more time, and it is very difficult to take any specific action till the stock is not crossing its crucial level of let's say 2300 on the higher side, or if it breaks 2000. So it is better to stay away from taking any specific long position. But yes, if there is a very short-term view, then close to 1970 or 2000 level, we should look for adding some long positions with a stop loss at 1950. The reason is because it has having very good support of 50 days simple moving average close to 1970. So if there is any quick sell-off towards those levels, we should be buying.
Okay. Moving on to our next query. This is from Santosh Kumar. He wants your view on IRCTC. Again, very strong momentum last couple of weeks. Tell us if it can continue that run rate.
Yeah, I think there also we are expecting upward activity because the stock is diverging positively. It is turning positively on daily charts, on weekly charts. And after like forming a multiple continuation formation, it has eventually broken the level of 620. So above 620, the next level to watch out for would be 700. Certainly, it's a buy, or if there is any correction, we should be buyer with a stop loss around 600. We are expecting 700 and maybe 740 in the long run.
Okay. We have time for one quick question before we take your picks. This is on Ambuja Cements. Tyagaraj Shanmugam wants your view. Talk to us about Ambuja right now. 382 is where it's shut shop on Friday. Where do you think it's headed?
I think there also we are seeing sideways activity, but broadly the stock is in the bullish consolidation. It is trading above 50 days, 20 days, as well as 200 days simple moving average, which is a rare combination for any commodity. And whenever we see such type of combination, we see furthermore activity in the near term. We are expecting stock to move towards the levels of 400 or 405. Currently it is around 382, 385. We can keep stop loss around 370, and we can expect 400 in the near term.
All right. What about your own picks, Shrikant? What stocks do you have on your watch list?
Yeah, I think while looking at the other major indices except Nifty and Bank Nifty, I think Nifty IT index should do well because it is forming higher top, higher bottom series, and it is still way below its crucial resistance level of 30,500. So we can expect some 500 or 600 point of rally in next few days. And on weekly basis also the stock index has given bullish breakout. So we are expecting IT index to do well, and in that TCS looks really good. It is around some 3365, 3370 levels. We are expecting TCS to move towards 3470, 75 in the near term. And here we can keep stop loss somewhere close to 3300 for the same. The other stock which we like is from the pharma index, because there also we saw specific activity in almost all the pharma companies. And there in that we like Lupin Laboratories, because on weekly and daily basis the stock has formed bullish reversal formation, and based on that we are expecting stock to move towards 700. We can keep stop loss around 655 for creating long position on Lupin.
All right, so two blue chip names, TCS and Lupin, to keep on your radar. Thank you so much, Shrikant, for joining in and for sharing your views on a host of stocks, the markets at large, and of course names that could be buzzing in trade today. With that, we're going to wrap it up on Morning Trade. Thank you so much for watching, but stay tuned with the Money Control. Markets with Santo and CJ comes up next.